My name is Alex Martin. I'm initially from investment banking, actually. I never touched real estate industry before entering the co-living space. I founded Colonies 3 years ago, which is a co-living operating company. Basically, the mission of Colonies is to design housing solutions tailor-made to the needs of the new urban population and making sure that people that live with us will be happier than in another place on the same location. We've been operating residence since 1 year and a half. Now we have 6 openings, 4 in Paris, 2 in Berlin, and we now have around 7,000 units under development all around France, but most of it is in Paris, obviously, in the center of Paris, but also in the greater Paris area. And we also have projects in Luxembourg, in Geneva, in Basel, as well as in Berlin. And we work with different types of investors. We operate a large array of assets, from 300 square meters townhouses to 15,000 square meters buildings. So we work with high net worth individuals that want to grow their real estate portfolio, as well as large insurance company looking for long-term steady revenues with exposure on residential markets.
Not quite as innovative.
Let's see.
But maybe a little bit bigger. So I'm lucky to manage the French platform for LaSalle. Who is LaSalle? LaSalle is, we say, one of the world leaders in investment management. We've got 65 billion assets under management. What that means on a day-to-day basis is that we invest only in real estate, but across several different disciplines. So direct, indirect, equities, we even have debt funds. We take all the risks that you can, and we also do lots of core investments. So we have the full spectrum there. We have global exposure. And to give you a feel for what we really do, we take the Germans to Tokyo. We take the French to the Czech Republic. We do a lot of cross-border investments. We do a lot of commingled funds as well. And in terms of risks, well, we can do core investment like the HQ of Goldman Sachs in the City of London, and we can also take positions on land in China to build multi-story logistics. So that's what we do.
Impressive. Yeah, I must say. So Union Investment, I think some of you will know, is the asset manager of the cooperative banking sector in Germany. So we basically take German money everywhere else. Well, we spend a good deal of it. Roughly half of what we buy is in Germany. But then we also have a global reach and branch offices in New York and in Singapore. But the bulk of our operations and investments are still done in Europe. So France is the second biggest foreign market for us after the US. So we've always held around 3 billion real estate in France, but we've traded a lot over the past. It's been a very favorable market. And I was lucky to cover it for almost 11 years now since I joined Union. I've been covering the French market, and I'm now responsible for investments across Europe, investments and divestments. So that's what we do, and we'll continue to invest in this country. We have a larger team on the ground. It's actually the biggest foreign team of Union, 15 people in our branch office here in Paris, and that also helps to get deeper into the market. And I think we cover a broader reach of divestment strategies in France than we do anywhere else outside Germany.
Okay, great, and also own this building, and thanks very much for hosting it.
You're very welcome.
The second session that we've done here, and it's a I really like the way that this has been renovated and changed. Yeah. So no, great, thank you, Renaud. Oh, I squeaked.
Good morning, everyone. Helaba is a German balance sheet lender. We're a commercial bank. We are based in Frankfurt. We have 3 business lines. One is commercial financing real estate. The other one is financing private companies, and the third one is financing municipalities. The size of the bank is about 160 billion. The equity size is about 9 billion. The bank is quite stable, and we are a bit of a conservative bank. I run the French team. We have 3 billion euros of loans in France, mostly offices. I mean, very much following the market, explained by Larry. This year has been quite successful, like I think most of us. We have done more. We will be doing more than 1 billion euros of new business. That's because partly we have had a lot of repayments, so we had to compensate for the repayments driven by the sales, and we are looking forward to 2020.
So I'm Andy Watson from Europa Capital. Europa is a value-add investment manager based in London. We have an office here in Paris, which I set up about 18 months ago. I'm 50% of the staff there, and the other 50% is sitting right in front of me. That's Jonathan, who many of you will know. We are owned 75% by Mitsubishi Estates, so giant in the real estate world, but not so much in Europe. So we bring the Japanese to Paris. I also take them to the Netherlands. I also take them to Germany, and they are generally fascinated by Paris. The whole Olympics thing, because Tokyo has the Olympics coming up, is a real bond. They also love the Grand Paris story that Larry spoke of. They like the good food. And there's an emotional bond that you get with Japanese investors in Paris that you absolutely don't get in Germany or the Netherlands. They can explain it, they can begin to understand it, but when they see Paris and smell Paris, it's something special. So I'm placing their capital in the core fund that I'm growing. More typically for Europa, we take North American capital and place it in value-add buildings. The most recent example, which Jonathan completed with great success, was the Semaphore in Levallois, which we pre-let to Doctolib and sold straight away to Primonial. So that's us.
Great, thank you. Good, and since you mentioned that you're a conservative bank, Renaud, just for balance, because this may go out in the UK pre the election, I also need to mention that Labour banks are also available. Just pick up. There are lots of fascinating things, Larry, in the presentation there that I wanted to pick up on. Maybe just starting with you, Renaud. Interest rates lower for longer now. How do you see the sort of macroeconomic factors influencing, I guess, both the French market, but also, in your sense, because this is going to influence the whole of the European market?
Yeah, it's a tough one. I think it's going to be more of the same going forward. We are more concerned about the exogenous risks coming from political issues. And very much following the change in the societies driven by digitalization, the greater focus on greenery, and the increased competition across any type of industry, whether real estate, financing, banking, you name it, any type of industry is subject to big revolutions here. We think the interest rate environment is going to be relatively stable going forward. But we have to step back a bit. I'm sure everyone realizes that it's only the Eurozone and Japan and Sweden and Switzerland which are in a negative interest rate environment. The UK, the US are in a positive environment. The risk premiums, like I think Larry's slides explain, on the Eurozone is quite favorable. And assuming Eurozone rates stay the same, there is no reason why the risk premium will change, which will keep on driving interest among investors into real estate greater and greater. But net, this is not going to be sustainable. I don't know whether it's going to happen after 5 years from now. This is a very long time from now. But what is sure is that the banking industry in particular cannot survive in a negative interest rate environment. I think it's going to stay here for a while for reasons we all know, trying to save Europe, the ECB policy, etc., and bringing back growth. But net, the banks, the world needs a stable financial industry. And in Europe, you could argue that this is not too much the case. It is the case in the US, it is the case in Japan, but not so much. In Europe, I think it's a bit of an issue.
Okay, good. And if anybody's got any, I'll just set a rule on this, which is that if anybody's got a view they want to give, do just give it. Don't wait for me to do that, and no need to be polite at this stage.
I've got one.
Andy, there you go.
So I think vis-a-vis the macroeconomics, what most of the big investment houses are doing, and I know this goes for LaSalle, is to try and find structural themes like demographics, technology, urbanization, to hang your hat on and try and make an edge in investment performance. So speaking for my house, urbanization is our thing. We do a lot of residential across different countries, and the mantra of the house is to do with migration of population, meaning cities are getting younger, countries are getting older. So people migrate out of the small cities, and this goes for Denmark, as it goes for Germany, as it goes for France, into the big cities. So urbanization is the one where we try and make a little edge in delivering performance.
Okay, yeah.
I have to comment on that. That was an opening. So, yeah, definitely. It's all about finding new themes, but it's also about staying disciplined. So, the co-living is obviously a subject we're going to be talking about, and it's an alternative that a lot of us are interested in. But when we're looking for higher returns, we have to be very careful about where we're going. So that's why France is such an opportunity for so many investors, because we have these infrastructure projects that Larry spoke of. We have the confidence on the ground. We live the day-to-day in Paris of the reforms and the impact that can have, on our day-to-day lives. But we still have to stay disciplined, and I think that's how we're going to protect ourselves from risks going forward.
Okay, good. And Martin, just in terms of, you're obviously looking across Europe. What are some of the, if we look back over a year or something, if we're looking back at 2019, what are some of the bigger changes that you've seen, that you've noticed, either about the French market or about also the European market?
Well, I think one thing that has happened here in France is the market's become a lot more international. Yeah, we've seen a wave of Korean money. I think the French institutions will, gain some shares back, some market shares. But in general, the market has gotten a lot more international, has certainly seen a Brexit effect. And we've seen a tremendous yield shift. But we've also seen, and that's for Paris in particular, rental growth. It's been obvious in the CBD with prime rents reaching 900 euros, but even more interesting in fringe locations or the extended CBD that has seen some tremendous rental growth. And we've been able to capture some of that. And I think what is interesting about Paris, it's about transport. Transport and public transport is a big thing in this city, but it's also a city with clear borders. And it's a dense city. And I think gentrification has always been a driver for Paris, and we're trying to understand where it goes to capture some of the upside.
Okay, good. And Alex, I just wanted to pick up with you. We've seen in the sessions that we've been running, for example, over the past year particularly, an increase in interest, particularly in anything involving living, anything to do with beds, in essence. And in terms of that co-living space, to me it seems a little bit like student housing did 5-7 years ago, where the first time we did an event, it was literally 12 people around a table at MIPIM, and when we did it this year at MIPIM, it was 450 people. So how do you see, I guess, where do you think we are at the moment with co-living, and how do you see that evolving and developing?
So I quite agree with you. I think creating a tailor-made housing solution for a certain target is basically the same as creating student housing or senior housing, etc. So I think it's not that new in the approach. What's new is targeting these people that doesn't have the same needs and requirements as student or senior people. I think there's a huge shift overall in the sector in the way we look at the people that are using the space, people invest in. And I think co-living is a bit of a follow-up of this trend of this wellness, well-being in the offices. We want to do the same with housing. But if you look, for instance, at France, the housing investment market is very, very fragmented. And it's been there's been a huge demand and an increase in demand that supply cannot cover. So overall, when you have a place when you can host someone, you don't have to invest in this place to decrease vacancy, because every time you put it on the market, you have 150 demand at least. So overall, the level of quality of the housing product that's been in the market, especially in Paris, has decreased a lot. People do not invest in these assets anymore because they are full anyway. And so we saw, as such, a huge upside for a product that would really take care of the needs of the client. And so basically what we do, and I think it's the same as student housing did at the time and continue to do when they hire their service level and their prices, we're trying to create like usage value in this type of assets. Really having like one client in mind for every location we go to. Should it be like a young professional, corporate needing some places to host new hires, expatriates, divorced people, single families, and so on and so forth. So I think you can like divide this trend into many segments, many durations. So it's going to grow, I think, tremendously, since the underlying macro trends of the housing sector are, I think, really the best in the whole real estate industry.
And do you think that the demand was there, but there just wasn't a product to meet that? So it was latent demand in a way that it was there, but nobody had come up with a product, and so people weren't aware of it. Is that what's driving it? Because presumably people would have found other places to live. So
the way we looked at it initially was that there has been a shift in the demand for shared housing. Like usually, it was a student product to live with other people in the same flat. And there's been a switch 3 to 5 years ago. There were more people working, sharing flats in Paris than people studying. And the average age of the occupants of a shared place has risen to 29 years old. So it's quite older than a student average age. And what we saw that it's people that earn money, can afford to have their proper place, but choose to live with other people. It's not the same, for instance, in Paris compared to New York. You can find a studio in Paris. You cannot find a studio in New York. It doesn't exist. It's, I think, 5% of the housing stock. In Paris, it's 30%. So you have the choice in Paris, and the more the demand grow, it was a real choice for people to live with others. The problem is that the product available for this kind of use were not existing. So it's large flats, not designed for this, where at 30 years old, you don't want to share a bathroom, you don't want to share a small kitchen. So we needed to adapt a new product to this demand that was already existing, actually.
Okay, interesting.
But I think co-living has always been around. I remember during my studies sharing a flat in Berlin with a couple of friends. I mean, that's also co-living. It's just become an institutional product and a commercial product with a better marketing, catering to certain individual groups. But in the end, I think it's all about people wanting to mingle with other people. And some others might just prefer to live in a small flat by themselves on 12 square meters. So
It's always been around in Berlin.
Yeah.
Berlin is like the mecca for co-living, and no coincidence that 4 of your buildings are there.
Two.
But is the flight to quality not the theme that we see in all the sectors? I mean, when Larry showed his future supply slide on the office market in Paris, I mean, there's so much limited new supply. And I mean, we've done a lot of value-add investments recently, and we've seen the rental growth come through in our buildings and in other buildings, and it's now that tenants are saying, hey, we want to be in really good space, and we're willing to pay for that. And so it's the same shift. And looking forward to next year, there's no change in that supply-demand dynamic. So faced with all the other challenges, I think that's definitely something for Paris that's different to other markets across Europe.
Okay,
And the
good.
city can't grow. Yeah. Talking about inner city Paris, it can only get denser, yeah, with new concepts, and people, I think, will always want to live in the city, not outside.
Renaud, did you want to? I'll come to you in a second. Yeah, Renaud, you wanted to.
Yeah, I have a question. Isn't there something we are forgetting here, which is, and I'm sorry to sound like the typical Frenchman, even though I don't think I really am, but aren't we forgetting about French regulation here? I mean, co-living, I don't know the industry so well. I studied both in the UK and the US as well. We all have our personal experiences of flat sharing, etc. But in Paris in particular, like I think you have in San Francisco now, there is rent indexation and rent cap, in particular driven by the Pinel law. So co-living, I think, is a fantastic product. As a lender, I think any lender likes it. Even though at Helaba we don't really do it because we have a bit of an issue with the operational risk. We would rather lend against leases rather than against management contracts. But other banks do, or debt funds do. But in relation
on leases, so we could work together.
Okay, good. But then you have to explain to me how you are going to address the rental cap driven by the Pinel law in relation to the strong demand driven by the students who are keen to get these studios or this co-living space, and with provided by all these great operators. But you have the French regulation preventing you from doing it.
I think the rent cap is one part of a larger topic, which is the affordability of housing in large cities, and as they get more attractive to younger people, and the growth demographic trends in these cities continue to grow, there's something to address, which is the affordability. So some cities chose to put a rent cap. It was the case of Paris. Did not go that well in terms of the effect. Some other cities, that's what the mayors of Hamburg, for instance, think. I think it's really the new position also of the French government with the new law that's currently being passed, is that we have to grow demand easier, the supply easier, so that we can lower this difference between demand growth and supply growth. Our position regarding whatever can be done to lower the cost of living is a great thing, I think, for everyone, even for us. And we are not trying to get the cost of living higher and higher and higher. What we do is basically do a trade-off. So it's not about the price per square meter. It's about how you set the spaces. So if you live with us, you're going to pay the same price as 25 to 30 square meter apartment. But the point is you have less space for yourself and more shared with other people. That's how we create value. So, you know, it's just about putting the space differently to raise the value and the perceived value of the asset to the client, which results also in more rent because we add also services to it. And rent caps cannot cap the price we make people pay on services if they want to. If they want golden toilets, we can put golden toilets and we'll make them pay for it.
There's an extra fee for golden toilet.
Yeah, for instance, no, but it's a crazy example, but it means as long as people are ready to pay for it and they want extra services, we can create value out of this while respecting the rent caps. We are working currently with a social housing institution in France doing social co-living. So it's possible at every level of rent. Then you just add the layer of services required by the tenant.
So the most high-profile rent cap across Europe is in Berlin, obviously. Came in June. Special Berlin dynamic at work there, which is that 85% of the stock is leased. So guess what? You put a cap on that, it's a vote winner. And it's a shameless shameless short-term piece of policy to win votes. And there's a fantastic English expression for this, which is snake oil. So snake oil is a remedy to a disease that actually does the opposite. So what's happened in Berlin since June is that developer after developer has taken his building permit off the table. So there's no way I'm going to build that. So that's a very extreme example that's out there at the moment.
But regulation is just such an issue. I mean, but I think that's also, to pick up on Jonathan's point, for Paris specifically, it's what makes it so complicated for us, but it also makes it really important to be a local player, and it's sort of protected our market to a certain extent. I mean, I look back over the last 18 months at the renovation projects that we've been working on, and the sigh of relief when we got the permits and the recourse and everything that goes with it, and explaining that system to international investors. I mean, they just look at you like you're crazy. And then you say, well, no, we work here by choice. We like the complicated nature of our market. And then they think you're even more crazy. But what that means is that local players like, you know, those of us that are in the room, we can create that value because we know how the system works. It is frustrating, but it has held us safe from future supply that we've seen expanding into so many other cities that, you know, creates much more risk for those investors on those particular locations.
You want to pick that up, Larry?
Yeah, I mean, I was going to more pick up on where we're seeing space actually built, and even though, as you say, Paris is extremely difficult to build, and completely agree with what Bev says. If you don't have a local presence, you know, for me, there's just no point in going anywhere near anything that's refurbishment or new development. But saying that, I mean, there have been a number of projects, and the city has changed quite a bit over the last 15, 20 years. And I'm thinking of you know, Batignolles, which was going to be the Olympic Village, and now has been built out into mixed-use scheme there. You know, we mentioned the Olympic Village that's going to come. You go to the left bank, you know, and every time I go there, they're finishing another part over the railway tracks in the former Zakriv Gauche and Austerlitz part. So, I mean, I think. You need to have local knowledge. You need to know the system, know the planning system, know, of course, the mayors, not just in the local arrondissement, but also the town as well. But I think when all those boxes are ticked, you are seeing, you know, some good quality stock coming through. And when it does come through, there's just such a massive premium because so much of the rest of the stock is so poor.
Okay, good.
Yeah, but you can also compare Paris, for instance, to Berlin, and the cities are so different. I think Paris has always been and will always be an investor-friendly city, and French are always good on infrastructure. Well, you can't really say that for Berlin.
Airport.
And the political issue about rent controls, I think there's just no real way to run up against it. It's a city that was once, as the slogan says, poor but sexy. Now it's still poor. Is it sexy for investors to invest in such a highly regulated residential market? I think it's going to scare people away. And I think Paris has always been good at attracting foreign capital and makes a big difference, I think.
Okay, good.
But I think there's a scale as well. I mean, you know, Berlin is a small city compared to Paris. You don't really compare the two in terms of sizes or anything. I mean, Berlin's just been this incredible story from the late 80s until now, and I mean, it looks like that's carrying on a bit, but there are lots of, as you say, lots of questions on it. Whereas for me, Paris, you know, you put it in the same pocket as London and New York, and it's a big, stable, huge city as well. So, you know, there's interesting dynamics with the two.
Yeah. I mean, and also interesting that when we did the session in Germany for the first time, people were beginning to look at Berlin and say that, yes, actually, that could become more of a capital city, not necessarily now, but that actually, despite all of the conversations up until this year, were no, all the cities will stay, you know, they'll all have their specialisms, and Berlin is fortunate because it has more room to develop. because it's got more land, but actually that same system will stay in Germany. But that was beginning to change, I felt anyway, in the discussion that we had 2 weeks ago in Frankfurt. I just wanted to pick up on a couple of the other themes. I mean, we've mentioned a little bit risk. Political risk has obviously been with us for the last couple of years significantly. We've now got, again, Trump yesterday. Maybe the China trade war is going to continue until he's re-elected to give him something else to do. There's still uncertainty about Brexit, various other things. We've got a general strike here. What's your sense of the politics generally, and how much is that influencing your work or the work that you're doing with clients?
Well, I feel like Brexit has already happened to a certain extent. I mean, I think there's the political Brexit, and I don't think we're qualified to be talking about that. But there's the commercial Brexit, and what we saw with the investment volumes into London and those that have, let's say, been deferred to the continent, you definitely get a feel for that. That doesn't mean that some parts of London are business as usual, which I think is a message that has to be clarified when you're talking to international capital. But yeah, commercially, investors seem to have this confidence in the continent and the various markets that they would have previously just looked at the UK, and it would have taken 2 to 3 years to even get them to Paris to look at the real estate that we have, and that's very different these days.
Okay, so that's a genuine change that you've seen over that 2 years, really.
But I believe that this might change in the near future because London, for instance, or London offices look relative value compared to many markets because there is a significant yield spread and financing costs have come down. And I think there is already a wall of money waiting for the political situation to hopefully settle and stabilize. And then I think Paris might again take first rank in.
So what's happening in Germany next?
Cities. Recession. The car industry is going down.
Talking European politics, we need a German.
Well, but we're not supposed to talk politics here, but the situation isn't looking too bright. Yeah. So that's, I think, German politics, we're in a wait-and-see mode. Yeah. But there are no new faces. There is no Macron emerging or showing himself yet to establish a new political era or a new political party or a movement or whatever. We're not seeing that in Germany. We're seeing the AfD, getting stronger and stronger. But that's I just don't see them, becoming an active political party governing any of the states yet.
Maybe sort of just to go over to Asia, because I mentioned in the presentation, I think we're seeing the unfortunate events in Hong Kong. Certainly seeing some of those high net worth or the tycoons moving either to Singapore, or we're also seeing some deals in especially London. Less so, we haven't really ever seen a lot on the continent, but I think that is an effect that will hopefully finish soon. But this. We mentioned the South Koreans, but then there's I think Japan is certainly an interesting one as well, and the Europa was saying, Andy was saying that they obviously do a huge lot for Mitsubishi, but there's this huge wall of Japanese money that's been sitting there for years, and everyone's waiting for it to really come. And then maybe just quickly on the Gulf as well. I think a big thing in Paris in the past was a huge amount of Qatari investment. And that had slowed down with the embargo situation. Even though that's still there, I think things are softening up a bit, and so we're potentially seeing a bit more Qatari capital looking again in Paris, and Saudi is a huge story as well. There's geopolitical stories there as well, but there was also recently, or at the moment, the big Saudi Aramco IPO, and we are seeing huge interest from there into Europe. And what they like is the stability. In general, I'm not talking about sort of all these markets. And what they like about Paris is this this stability in this large city. And generally the whole, the Gilets jaunes, the strikes and everything that's happened here, we haven't seen a huge slowdown because of these things. There's a huge amount of other positive things behind that.
I'd just like to share with the room a pithy email I got from Japan on the Gilets jaunes subject. This time last year, just as it was picking up momentum and cars were being burned and the Arc de Triomphe was being ruined, I get in Monday morning the overnight emails. I get one from Tokyo with the heading "Yellow Sweater," and it's got 3 words in it. Please explain. Thank you. So the point of me telling you this is that we're in for another wave of strike. I think we're all hunkering down for Christmas here, and in the eyes of the world, these things, and particularly for a culture like Japan, where they're incredibly polite and consensual, this is very hard to deal with. So fingers crossed that we're not doing the same please explain routine every Monday.
But are Japanese generally afraid of politics? Because I sense that, political situations don't really scare European investors away anymore. So I think the investment market in the UK has held up reasonably well, and so has the occupier market. And then again, another good example is Catalonia. I think the Catalans have done everything to ruin the image of Barcelona, but Barcelona has been outperforming Madrid for the past couple of years, and it doesn't scare foreign investment away. It doesn't scare occupiers or investors away. So I sense that, I don't know how you see it,
I think,
but political issues don't matter as much as they
to
used
your
to in the
question,
past.
I think economics trumps politics. And I don't mean that in the Donald sense. It's economics is more important than.
Yeah.
And where we have QE rebooted since September, October, we're all in a benign morphine-induced sort of situation for the next year. Politics, it would take something really black, like a war, to kick it out of that situation.
Well, there's an
Or a
optimistic...
real trade war.
Or a trade war.
Yeah, interesting. I just wanted to pick up on one quick theme, and then we'll do a quick dive down into the sectors. But certainly, for example, last year we did maybe one session on. So in 2018 we did one session on sustainability. In 2019 we did our first session on well-being, wellness, well-building, and winning cities. And then probably by the time we got to Expo Real, around 4 of the topics were all around that ESG wellness side, which indicates that that's either becoming a more significant trend. I mean, I know, for example, Union had been, focused on ESG sustainability for a long time, but my feeling is that that's becoming more important just in general, picking up that theme as well, in terms of wellness that you're talking about, well-being, Alex, as well. What's anybody's view on that? Is that something that's impacting now both the views from the capital as well as from either your guests or your occupiers or your residents?
I think it's one of the things that's come together to support the rental growth. So I think that the fact that occupiers are so much more focused on these important topics, and landlords as well. I mean, had it have been a different dynamic, I mean, in France, when the green annex were introduced to the leases, we all knew it'd be a fight to get the data from the tenants because they just weren't interested. But that's been a real big shift, and so that's really accompanied the fact that the buildings that we produce as products, no matter what the sector we're in, when we have that motivation and drive for the ESG elements, then the tenants have that too, and they're willing to pay for it, and they see the long-term investment that they have in that. So I think it's something that's combined with the supply and demand dynamic to help us with the rental growth.
And are you finding that, Alex, that people are actually prepared to pay more for different or higher service levels, that actually by providing a different service, then that will increase the amount of rent that people are willing to pay?
Yes, I do think so, but people are not willing to pay for anything. And for instance, I'm not sure that the average tenant will pay more to have a more eco-friendly house today. They have this consciousness, so they're willing to buy different products, but I'm not sure today they are willing to pay higher rent just for that. So I think for this part of a service, because it could be considered as a service, to be more eco-friendly in the way you design and operate the places. I think that it's more towards the political acceptability of a given project, that it's useful and where we see the value of it, rather than having the tenants pay for it. It's a bit like the internet, I think, eventually. Like, you will not make people pay extra for better internet, but they won't live in your places if you don't have a good internet. So it's a must-have. It's not a value creator anymore.
It was interesting. I had a discussion with somebody about, we did a session last week on innovation, prop tech data, and one of the discussions was, going back to the fundamentals of what you need in an office space or any kind of working space, what do you actually need? And the decision was that actually the one thing you needed was super fast internet, because you could sit in the dark and your laptop would still work on a battery for a couple of hours, but if the internet was off, everybody would just leave. So interesting how that's become a much, much bigger topic. Andy, did you?
I think on the related ESG subject, interesting to note that in the Urban Land Institute document that's just come out, the emerging trends, this year technology's been overtaken by climate change as the #1 influencer of behaviour in real estate. We've had some savage weather in the last 12 months, but if you like, that's a pointer to well-being and the whole awareness of that. So, I mean, for years we've been talking internet and sitting in the dark and all that good stuff, but now climate change is #1.
Yeah, for my kids too. They were on strike again Friday, both of them, school strike, Fridays for Future. I think it's not only the younger generation, but it's also amongst, say, occupiers, tenants on our portfolio. There is a willingness, for instance, to share data, as Beverly has said. We noticed that because sharing of consumption data is the basis for creating a greener building and a greener environment. And I think there is a consciousness evolving around that, which hasn't been there a couple of years ago. And we've moved on at Union from a green investment strategy to a manage to green strategy on the existing portfolio, because we have many outdated buildings where we first need to start measuring consumption of the tenants before we can start improving the buildings. So that's happening as we speak. I think it's a general trend.
And just in terms of your portfolio here, because obviously France, Paris, a lot of older buildings, how practical is it in terms of regeneration of those to hit some of those green standards? What are the sort of things that you are able to do?
Well, some of the buildings we will never bring up to a standard that a new build will have, but we have just completed a building at Saint-Lazare, the Grand Central development, which holds one of the largest rooftop terraces in Paris. And this rooftop terrace is, it's full of greenery. Yeah, they're growing crops up there. I don't know if there are beehives as well, but it's really, I think, a landmark project to the extent that it does, say, tick the boxes on green environment, even though that might, in the first place, just be a marketing argument. But I think it's important, and it's possible in Paris, and even on existing buildings. You just need to invest a lot more money. But given the land prices and the rents, it's worth investing capex in Paris building, and that's a good thing.
And it's one of the things that have come up as well is because you can often tell which questions come up in audiences, and up until this year, nobody had asked a question about impact investing, investing with a purpose. But that often comes up now, which is an interesting one, just to be able to see how those changes those come in. We've got a limited amount of time left, so I'm just going to do some shortish ones. Raphael. outlook for financing? What are we seeing?
My name is Raphael now.
Oh, sorry, Raphael. I'm thinking about somebody else. Renaud, sorry.
Sorry, what was the question?
And interestingly, it turned out in discussions earlier that Renaud and I were both at university together.
Don't try to fudge it. Don't try to fudge it.
Yeah. Renaud,
So what's the question?
just about the outlook for financing more generally. How do you see that? Where do you see?
I think it's quite not worrisome. The senior lenders are kind of conservative, have a bit of a conservative approach with 60%, 55 to 60% LTV, 5 to 7 year. There is a demand still from the borrowers, and I guess if I were a borrower, I would still be asking for 10-year debt at 70 plus % LTV. You won't get it from Helaba, you won't get it from most of the commercial lenders. You would have to tranche your debt and ask to a balance sheet commercial lender like ourselves, and then complement it with a debt fund or a junior or a mezzanine fund. But so the big questions among banks right now is whether on average, the market is at 50%, 55% LTV. Whether the 55% LTV of today is the 80% LTV of 5 years from now. Because the question, I mean, everyone, I think, agrees that ultimately interest rates will rise up. I said at the beginning of this discussion that the interest rate environment should remain stable for a while, at least 2 or 3 years, I guess. But beyond that, no one knows. We are fully aware of all the issues about over leverage, especially in the Eurozone. So the question is, will we eventually get real growth in the Eurozone? Right now, it seems like inflation is 1% plus, but real rates are actually negative. And like I said at the beginning, this is not sustainable. So hopefully, if we talk about France, the reforms will bring back inherent growth in our economy, and which will convert into rental growth. And then, if and when rates go up, which will drive value down, rental growth will compensate for that. And that's the big question we ask ourselves. So as lenders, and as most good lenders in the market, we very much focus on the good assets, the good locations. We spend a lot of time looking at the infrastructure, the accessibility, and the strengths of the asset managers. Because we would rather stick with borrowers who have a strong value add in terms of asset management, who create value through operational skills, rather than through financial engineering. Financial engineering is easy. Operational management is much tougher. At Helaba, 70% of our book is in core plus, 30% is in value add spec development. We would like to do more. We are taking some interesting positions in the northeast of Paris, in Rueil, etc. But we're also very good core position, Place Vendôme, Faubourg Saint-Honoré. But we would rather, the value is in these locations which are more on the fringes of Paris. And we are prepared to go there, but subject to doing it with good guys, like most of the people I know here and in the room.
Good.
Thank you, Raphael.
Good. Let's look at some of the sectors. I mean, Martin, in your kind of day job, I mean, I know that obviously Union invests across the asset classes, but you're mainly focused on office. So what are you seeing in terms of the office sector particularly? Do you have concerns over the WeWork issues that there have been? How do you see that? And I guess what are you seeing as the main trends for the office sector, both here but also in terms of Europe?
Well, I think one trend I'm expecting is to see less co-working occupiers take space. I mean the same, but taking less space. Most importantly, WeWork. I mean, the failed IPO wasn't the end of WeWork, yeah, but it was the end of an aggressive expansion strategy that has, to a certain extent, driven the markets, and which has come to a halt. And they might, as we speak, review and reconsider some of the centers, which they might open or not. And that is, will that have an effect on the major office markets in London, Amsterdam, Paris? I don't think so. But it might have an effect on, that some of the clients of these operators might take space directly, and it might help, say, the letting market below 500 square meter, which is a bracket that hasn't been so active, to recover to a certain extent.
Okay, good.
Or other operators take market share from WeWork, but I think no real game changer in sight.
Okay, good. And in terms of the French market particularly, I guess when you're looking at the market, what are you looking for? What makes it interesting for you, a particular asset or a particular area?
Well, our French portfolio has always been focused on offices. I think that's the dominant sector anyway, so we'll continue to invest in offices. We will also enter the market, I think, quite shortly for logistics. That's also part of the strategy to increase our exposure in logistics, which is, say, minimal today to a 5% across the portfolio. So that's going to be one strategy. And we're also considering micro-living, as we call it, and that includes co-living as well, because here in France we still see, as you've explained, that operators are willing to take leases, and to operate under leases, which we, according to our rules and regulations, are able to invest in. We're not able to invest in operating models. So there is certainly a market there, which might be bigger than in Germany for that sector.
Okay, good. And from a Europa perspective, obviously when you looked at also you mentioned the ULI trends, when you looked at the ULI trends, it was essentially beds and sheds, as the English insist on calling logistics. Where do you see that argument in terms of the investment appetite, I suppose, for your capital as well?
Yep, beds and sheds is our strategy for the next 12 months for our core fund. So very specifically, Dutch sheds, Danish beds. And we have just completed a deal last week with another 5 Dutch sheds to add to the 3 that we'd aggregated over the last year. So we've got up to 8 in a corridor across the Netherlands between the big port of Rotterdam and the German border. Thundering trucks, great boats, because it's Holland. Just all in all, a super place to do business. So you have to put your chips somewhere. We really like the rent growth story there, driven by e-commerce, and the Dutch are really getting the hang of that. Copenhagen for beds. That's our pick. The value add side of the house has successfully delivered multiple resi products, PRS now, not the funky bits. Regular PRS, which doesn't have rent control. And we'd like to transfer some of that knowledge to our own strategy for core.
Okay, good. I mean, there was a mention also, particularly, and it's been a discussion in a lot of the ones we have about the move towards regional cities or secondary cities, however you want to call those. In France, it was interesting there, the presentation at the beginning, where you could begin to see that increase happening. I guess this is, to everybody in a sense, is, are you beginning to look more at those regional cities, particularly in France? Are you lending more there, Renaud? Are you looking at investing there, Martin and Beverly?
As a lender, we're actually exposed to the regions. We finance BEV in Strasbourg. We are doing VEFA, big shopping center in Lille. That's Lillenium, which is coming to market in April. Yes, Andy. Oh. And we have done other stuff in Toulouse. We have been looking at Marseille. So yes, we look into the regions. We love to do more in the regions. We follow the market. We are lenders. We are not the drivers of the market. We are facilitators, or we try to be. So we go where you guys go, and we take our risk and calibrate it with relevant leverage we want to. So.
I'd love to do Lyon, but I have this great knack of being second or third. But that's only because we're looking at core products. And I think maybe Larry's a better place to tell us what's happening on the yields there, because I certainly don't understand. But retail is definitely something, and logistics, that takes it outside Paris. I mean, that's it's much more a regional strategy. The Strasbourg Place des Halles that has been referred to is a 40,000 square metre shopping centre. Some people were surprised we took that position at the end of 2017, but it's a city centre shopping centre. It's very dominant. We can do lots of things with it. And we invested in it as a long-term hold. We knew there'd be some capex and lots of work to do, and it's something that's performing well, which comes as a surprise because retail has become so much a tarnished sector. But yeah, much more to be done in the regions of France, I think. And then logistics, well, it's a difficult one to explain, again, to international investors. This split between motorway logistics and urban logistics is a difficult one to draw a line on. We've just done an urban logistics deal, but that was close to Paris. And the motorway network in France, I mean, it's second to none. I mean, it's really areas that you can invest in if the product is there. But the yields are looking dangerously close to the ones that we'd find in Germany these days. So on that, I will pass to somebody else.
And maybe in terms of yields, as you say, the core office yields in the likes of Lyon, or the core logistics yields, are at levels that, you know, the really extremely low. I think the latest deals in Lyon are around the sort of 3.5 mark, and you know, logistics 4.25. So those are levels that we've never seen before, and I think the question is, where's that going to go? But I think in terms of regional cities, even though, like I said before, the Paris still is 60-70% of investment volumes, 30% of GDP, you know, it's such a huge dominant city. I've often been surprised that there hasn't been that much international investors outside, really, I'd say, the French and the Germans and the kind of global investment managers looking at these big cities, because, you know, there's a huge amount of positive trends there. They've all got excellent, generally excellent train networks, very sort of dense city centres, you know, small Parises, and usually, you know, stable and stable rental growth. Or gentle rental growth, not very sort of strong rental growth, but when there's recessions, not big rental drops as well. I guess some of the main issues has always been the investment volumes. You know, you can't find that many deals over 20, 30, 40 million euros, and you know, the global capital's looking for bigger deals.
So, I mean, retail-wise, I was at MAPIC recently with Richard. 8,000 people there. Once again, Reed Midem managed to deliver the same numbers, but boy, were they not the same 8,000. Retail is repurposing itself all the time, so it has turned into a mini logistics conference. So for the first time, people like Panattoni and Mount Park had big stands where, you know, a third of their tenants are retailers. The mixed use thing was front and center, and even, you know, the retail word, the R word, is a bit of a dirty word. So I'm with the Urban Land Institute, co-chair of the Retail Council. Only I'm not allowed to call it that. It's the Retail and Entertainment Council. So everybody's reinventing themselves in the retail world, and I think it's the next big thing. I really do. Retail recovery funds, give it 2 years, and it's going to be the place to make money. I'd say back at MIPIM as well, the two real buzzwords were the things where people were talking about were when should we get back into the UK, and when should we get back into retail. I think those were the big themes of investors, and yeah, it's not neither without challenges or dangers, but there are some people who are going to make a lot of money from both of them.
And I think the sentiment, what I feel, is rather sooner than later for London and retail, because you constantly compare it to other asset classes, and looking at logistics, for example, the yield shift on logistics is one thing when you're talking about single assets, but on portfolios, if you want to gain scale, the premiums are just ridiculous. So there's certainly relative value in retail, and relative value in London too, because the market fundamentals are there. It's just a matter of the political situation to clear up.
Yeah, scale's the thing. So if you look at the core property index for Europe, only 3% of that index is residential. 30% of that index is retail. So there's a lot of it in institutional hands, and it's the scale that's going to make it the opportunity.
And it isn't. I mean, so the front cover of Living Retail magazine has basically, it's about leisure. You know, that's Play Power, who've brought together a whole series of different brands under one roof because that's now part of retail. And dark kitchens are now part of retail discussions. There's all kinds of things that are now fitting within that. And interestingly, the ICSC in Europe has split away from the ICSC in the States and will no longer be called the International Council of Shopping Centres, but will be called something else to be announced by the beginning of January. But we'll also be looking much more at retail within urban centres, within placemaking, within how that influences cities. So it's changing entirely how that's going to be perceived, which is interesting. Let's just start with you, Larry. If these good people had to invest, where should they invest? So what are your top tips for everybody looking at 2020 and beyond?
Hang on, do we have to pay him for the answer?
You don't.
Yes. It can be deferred. So just talking about France or talking about Europe?
You can make a choice. You can either give me one for Europe and one for France, or you can just stick to one or the other. That's up to you.
Okay, one for France. I think I'd still go for value add office, well situated in Paris. And I know it's not particularly exciting, but you know you're still seeing it's still such a huge amount of the investment volume. There's still such a poor level of stock, and there are these huge infrastructure projects. Plus, the Brexit effect, and even on the infrastructure projects, they're going to. What's interesting is they're going to transform good existing markets like La Défense, like Boulogne, like markets that are already there and existing. So I'd say anything that is poor quality but good fundamentals. A nice kind of 1930s building in central Paris, even though it feels extremely expensive, I'd still certainly look at that in terms of France. Outside France, something we haven't mentioned much, Central and Eastern Europe. I think there's been some interesting trends. Got a colleague from Poland here, actually, so I might as well talk about Warsaw. I went there for the first time in about 10 years, and that market has just transformed hugely. All the office towers that have been built there. There was a worry of oversupply, but with very strong GDP, there's been a lot of proper Polish industrial and international big companies coming in and taking up the office. And then South Koreans, Germans, national investors have swept up all the investment stock as well. So Warsaw, I'd say, is probably an interesting market as well.
Good and interesting as well that there was Japanese money coming in to buy student housing as well in Poland. We just did a CE summit there 3 weeks ago, I think. But yes, fascinating to see how much that's changed. Good, Alex. And I guess also to a certain degree what your expansion plans are will tell us where you're thinking about investing.
I think that what's currently happening in Paris in terms of transportation infrastructure is maybe one of the largest transformation we'll see for such a city in quite some time, and I think it's being the largest transformation of Paris since what the Baron Haussmann did with what we currently know of Paris. So I think it creates a huge amount of opportunities. Of course, there will be areas that will win from this, and some that we will win a bit less. Sorry, but I think there's a huge opportunity there. I think residential overall. Of course, it's my playground, so I'm full for it. But it's what I've been dealing with quite some time, and I think it's the steadiest market regarding fundamentals. There's a lot of value to be created in all these areas, suburban areas that are coming up a lot while I think the risk is very limited. And just regarding these new types of product we're developing, I think from an investor standpoint, there's also a lot of value to be created in the short term, because we are still seen as risky plays, because we don't have the track record required to attract these very long-term, low-yield investors. But this is changing. We're seeing the cap rates of the operation we're in lowering bit by bit over each month. Each operation has a lower cap rate at the same location. So there's a lot of value to be created as well, arbitrating those over a short period of time, waiting for the market to lower the perception of the risk related to the operators of such a sector. And regarding the expansion, that's what I was saying earlier, but we are trying a lot of different small assets just to test demand in every market, and we're going a bit of everywhere. And what we see is every time we open something, we're completely amazed by the level of demand and the prices people are willing to pay for assets. Really, to just talk about our business model and our margin, we're targeting from 15 to 20% EBIT margin on the operations we do. We haven't done a single operation operating at less than 25% EBIT so far. So I think everywhere someone lives, there's a need for a special product tailored to them. Yeah.
Okay, good. Bev?
So it's a difficult question for me because we have all these funds and all these different risk profiles. But when it comes to Paris, we are a great believer in the Grand Paris theme. Much like Larry said, first investing in markets that are already established or starting to consolidate before stepping out to the timetable of 2030 for the last train to arrive. But yeah, I mean, that will have a very positive impact on central Paris. So central Paris's offices were fully behind that. And then in the other sectors, retail is really something that we still believe in. And that's something that we shout very loudly about. And then logistics is the same. As long as the pricing is right and that the CapEx, you have to spend it, then you do get a return on that investment.
Okay, good. Martin?
Yeah, first of all, I won't buy Warsaw from you, Larry. Not even if it's the shiniest office tower downtown.
Don't worry, we've got other buyers.
Well, the market hasn't been too kind to us as a long-term investor. There's value in it, but more for development, I guess. I would rather buy your 1930s office building in a good location in Paris at a low rent level with a capex requirement and at an eye-watering yield. Yeah, but we've always found value in such buildings and locations. And yeah, privately, maybe a flat in the 10th arrondissement to capture some capital value growth and maybe a place to live sometime in the future. Yeah, and professionally, maybe London's next, who knows?
Okay, good. Renaud?
As a lender, I would support any of the things which you guys do.
For a small price.
Here we go again. If I had a fund, I would do two things. I would invest massively into student housing. I think in Paris, this is going to boom at last. This has been talked about for the past 20 years, but I think the timing is right. And also, I would have another pocket allocated to senior living in relation to the aging of the population. Again, this has been highlighted as much smarter investors than me, like Ruggieri, founder of Batipar many years ago, decades ago. But I would really go into that in a big way. And I would leverage from the pile of money in the French industry, French economy. We haven't had a chance to talk about that, but the French are big savers. So are the Germans, by the way. There are a lot of pocket of savings to recycle through vehicles, which have to be structured, SCPIs or whatever you call it, OPCI, etc., to invest in these two asset classes. And what else did I want to say? Yes, we haven't spoken about the weight of liquidity of the market, and also another point, which I guess you guys, when you talk to your sponsors, are exposed to, is most of the sponsors are actually looking into increasing their exposure to real estate in a major way. I heard through Explore AI in particular that right now the average level is 8% of the allocation is to real estate, and they are much talking about increasing it to 12%. If you convert that into real hard money, this is big time money. And finally, I'm French. I love my country. I think we are on the way of big restructuring in France. We are world champion in soccer. And if we didn't have these Gilets jaunes guys and the strikes we have, think about it. We would also be world champion, I think, in the developed world. So invest in France and finance with Helaba.
and get out before the city and the whole country shuts down tomorrow.
So much has been said. So I think the idea is that I'm going to do a joint venture with Bev. We're going to buy from Martin, have Larry as the broker, and borrow money from Raphael.
And
What
say-
about Alex?
And
Yeah.
invest in co-living.
Yeah, come on.
Yeah, I'll stay in Versailles whilst I'm doing it. So I think our answer, one core side, one value add side. The value add side is very much the 1930s Paris office building with lowish rents. Exactly that. That's good. So I can't buy from you. The core bit is beds and sheds, also for France, and specifically beds in Lyon. We might come second too, but that's very much a focus, hopefully with a bit of mixed use, nice retail on the ground floor. And sheds down the Dorsal. That would be our pick.